Okay, this is Timing Strategies for Thursday, June 26th. I first need to say, sorry we haven't posted for about a week. I've been out of town for the last 3 days. It's Thursday. I've been gone Friday till yesterday, so apologies. We don't put this up we don't do these every day unless you contact me. I give you my personal emails, thoughts, and market notes and things like that. But other than that, we put these up on a best efforts basis. So let's get started. Last time we spoke, or I think I put a post up, we were spreading. We were short all the way from the 19th. We did some things in this little range here. We were spread, so we're still short about 40%. Short the S&P, Dow, NASDAQ, Russell, but we got long some financials right at that point. So far, using the XLF as the trigger, basically it was right at that point, or that point right there, that we got long. We haven't seen any kind of real appreciation in the accounts in the Ridex end of day, but we haven't suffered any really of the drawdowns. Actually, we made a couple of bucks. We're up maybe 1/4% or 0.5% from that point. Sure, if we would have just stayed straight short, absolutely, we'd be up another 2.5–3% maybe. But we're not. But we're just basically treading water. We're up maybe 1/4% or 1/3% from that spread. Today, though, we actually went long. What we did for our portfolio is we kept on the 30% long position in the XLF, which is not the XLF necessarily, it's the Ridex stuff, but using the XLF as a proxy. So we kept our 30% long position on. We didn't change that. But what we did do, and here's the XLF, what we did do is we also added long in the Dow. So here's the diamonds, here's the Dow. We used the diamonds as a proxy for the Dow, and we had a price target on that thing of about 114.50 to 113, as deep as 113, more like 113.50 we'll call it. And because we have end of day mutual fund pricing, we have to buy in a little bit ahead of the time. So we're now long 30%. You can use the S&P as a proxy, but we did straight Dow Ridex mutual funds, 30% long there. We're long 30% XLF, and we also got long 15% in the gold markets, the Ridex precious metals fund, and that was today. So we're long 15% Ridex precious metals, long 30% Ridex Dow, and we're long 30% Ridex financials and banking. But at that same time, we moved our positions and portfolios around a little bit. We are still short some of the other major indices, the Qs and the Russell. So we're short the NASDAQ 100, and here's a chart of that for the Qs, 40%. So we're short 20% in the Qs, or the NASDAQ 100, and we are short 20% in the Russell. Why? Why do you ask me? Why may you ask me that question? Well, because I see a lot of weakness still potentially coming, more so in the Russell and the NASDAQ, where I see the Dow, using the diamonds, as so damn oversold. This is not capitulation. I'm not saying that there's a bottom put in. What I am looking for is a snapback trade. Starting tomorrow, or at the latest Monday, we see a trade that comes down maybe a little lower than today's low and today's close, and then kaboom, if we're right. Kaboom is always, objective. If we can trade back above that line of the January lows, because we did close below those today, wash that out maybe 1 or 2 more days, and then bang, get back above that 1150 area, or 115, 116 on the diamonds. That will give us enough of a spike, I think, to take us up to about 1200, 12200, basically a 5 to 7.5% move. What I'm looking for here in all these markets, on the Dow and the S&P and everything that we are long indices, is basically a 5 to 7.5% move back up. Not enough to say, okay, we put in a long-term bottom, because once we get back up 5 to 7.5%, it'll determine if we can get back up to 1340 or maybe 1370 in this level on the spiders. That will put that short position back on. But for now, the markets have satisfied. If you look at our article, stock market choke points, here's the S&P via the spiders. our buy point where we were looking at getting long, straight long, 80% on the spiders, which was about 128.50. We got 128.23 today. Instead of just getting straight long, because the momentum is starting to pick up, we haven't seen a capitulation down from this. You know, it's just been stair-stepping its way. I don't want to buy too aggressively on a stair-step move. Had we sold off from this point back on the 17th of June, straight down to where we are now, then we would have been more of a buyer. But because we're just dripping, drifting, sagging lower, that's not enough of a setup for me to want to get aggressively straight long. So in that situation, again, we're long the Dow, and we're short the Russell and the NASDAQ. So for what it's worth, and again, we're long gold using the GDX as a proxy. And why did we get the gold long? Well, you know, I was actually looking for a little deeper sell-off on the GDX down to about 38. We didn't get that. We bounced instead on the GDX above that second low. Eventually this may fail, but you know, I could be wrong and this thing could take off. I don't want to be left without a ticket. If this thing takes off and breaks this high that we put in back on the 22nd of May, I don't want to be buying it up here. I'd rather be buying it down here and risk a little bit of a loss, because I can manage the risk a lot better at this level than having to try to buy a breakout. So beyond that, again, XLF, I'm anticipating some kind of regression or move back up in the financials. XLF could hit, you know, 2050, which is about it. You know, we should see the lows. I'm anticipating tomorrow or at the latest Monday in most of the sectors in the stocks and especially the XLF. If I'm wrong, we'll take corrective measures, but for now we got to manage based on our best estimations. If you have any questions, please send us an email or give us a call. Until our next posting, I wish you all the best.